makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. Happy Tuesday. I'm Tom McKenzie here in London. Here's what's coming up on today's programme. European stocks rise after a tech rally drives Wall Street to yet another record. The Fed's Patrick Harker, meanwhile, backs the case for one rate cut later this year. Deal delayed. European leaders postpone an agreement on how to divide the bloc's top jobs. Talks will continue ahead of a summit next week as Ursula von der Leyen hopes to win a second term as Commission President. Plus, Marine Le Pen's party says it needs an absolute majority to govern France, as polls show the far-right National Rally in the lead less than 2 weeks before voting starts in those parliamentary elections. Let's check in on the markets. It's a second straight day of gains for European stocks. A bit of relief, it seems, around what we're hearing out of France, at least for now. But that, of course, given the context of the 6%, more than 6% sell-off we had last week on the CAC 40. We look ahead in terms of the US for the retail sales data, the most recent month, expected to see a modest uptick. But, of course, an important gauge in terms of the health of the US consumer. Here in the UK, then, you can see green on the screen, the FTSE 100 gaining in the session today. France is back, it seems, at least for now. The CAC 40 adding to the 0.9% gain that we saw yesterday. And a pretty decent session. The FTSE MIB posting gains of a little over 1% as things stand. Over in Spain, the Spanish IBEX eking out gains of 0.2%. It's a modest upside in terms of the French story, by the way. The CAC 40 up just 8 points. CAC 40 is a key drag there. It's one of the biggest losers of the session so far. In terms of the futures, S&P futures currently flat after, yes, a 30th straight record year to date since 2024, in 2024, of course, for US stocks, powered by the gains coming through for mega caps. Euro dollar at 107, a little bit of weakness coming through for the single currency, down 0.1%. And of course, we continue to monitor the pressure on the sovereign debt story of France. The 10-year right now at 3.19. The spread, of course, over the benchmark German bonds remains pronounced at around 80 basis points. It's a story and an asset class we keep an eye on. Now, European stocks, as I mentioned, opening higher, of course, after that record, that 30th record for the S&P. Let's bring in then at this point for the analysis in terms of how to position in this market. Maria Municchi, fund manager at MNG Investment Manager. Maria, let's start with the political risk question. There maybe is an argument there's a bit of dip buying going on in European stocks at this point, given the pretty pronounced sell-off that we saw last week. 2% across the benchmark, 6% plus for the CAC 40. Would you lean in to that dip buying if that's what we're seeing?
Yeah, I think it's extremely interesting that what we're seeing is, in a year that was known to be a year of election, the one election that is, in a way attracting interest is the one that was not expected, really. But what we've seen so far is a significant initial risk-off in this market, specifically focused on France. So we've seen the odds spread widening very markedly. We have seen credit spreads as well as an indicator of risk widening in corporate French bonds. We've also seen, obviously, the equity market, and in particular, French equity markets as well as French banks, which have, benefited quite strongly this year, but have sold off very aggressively. This could potentially be an opportunity. The slight warrant there is that if we look at the all-in yield of French bonds, there is not moved very significantly. If anything, is still very contained. And we see it well below the peaks that we've seen last year still. So I think there is potentially a risk that if that yield will move even higher, you could see more risk off on those markets. But it is potentially an opportunity, I think, something to watch for the weeks ahead. Obviously, we don't have a lot of time until the actual result of the French election, but we are starting to see some potential opportunities arising there.
Where do those opportunities take you? With the caveat, as you say, that there's a risk around potentially higher yields and what that could do for the equity space in Europe. Are there sectors that stand out? You mentioned banks. They were sold off heavily in France last week. Is that an obvious sector that stands out to you where you saw... Could you make the case that those were oversold as a sector?
Yeah, I think banks is a very interesting one. French banks in particular, we've seen very, very marked sell-offs. We've also seen sell-offs in the utility space, which was also interesting. But overall, I would say, you're coming, especially for the bank sector, from a period of very strong returns. So there is that caveat as well. Investors have been leaning into European stocks more as we progress throughout the year. So there is still potential, if things start to look a bit more volatile, that you might see a little bit more volatility also in the stock market, potentially as a good entry point for the long term. But overall, those stocks are not expensive as well, which is a very important case for European equities in general, which is a market that we have been exposed to since the beginning of the year, where we see attractive value over the longer term, given the valuations, but also given the overall growth and earning trends, which, yes, has not been as important as we've seen, obviously, in the US.
So to be very clear, the political risk does not derail the thesis for European stocks?
At this stage, I don't think so. I think it might offer some short-term opportunities, but there might still be volatility coming ahead of the election, because what we've seen in terms of yield moves is not significant enough to have shaken up really confidence of investors as yet. And I think this is why you're seeing, buying the dips at this stage, where investors, are not really scared yet about this market and the consequences from a political standpoint.
We've been listening to Patrick Harker speaking overnight of the Philadelphia Fed in terms of his views, and he wants to see more evidence in terms of where inflation is going. But he gave his base case of one cut this year. Let's take a listen to what the Fed president of Philadelphia had to say in terms of his views on rate cuts from this Federal Reserve.
I have a forecast for inflation, employment, and economic activity, slowing but above trend growth, a modest rise in the unemployment rate, and a long glide back to target for inflation. If all of that happens to be as forecasted, I think one rate cut could be appropriate by year end.
OK, Patrick Harker speaking there. Where is Maria Municchi in terms of the expected cuts from the Fed this year, if that's where you land? Are you going for one or two? We know the dot plots suggest that the FOMC is pretty divided on this. 8 to 7 in terms of how many cuts. We'll either get 1 or 2 this year, maybe more priced in for next year. Where do you land on this?
Indeed, and I think, the outcome remains very, very data dependent. It remains to see where inflation is going to go and what the strength of the economy will continue to be between now and the end of the year. On inflation, we started to see some benign sign. We've seen the last reading coming in, better than expected in terms of inflation cooling. And there is also some signs on growth, especially on the manufacturing side of things, that make us a little bit wary of where, economic growth can go between now and the end of the year. However, what is important to observe is what are the expectations of markets and how these have shifted from the beginning of the year. So certainly we've entered the year with strong expectation for cut rates from a market perspective, and those are now, massively delayed. So there is more opportunity, I believe, now in treasuries that there were at the beginning of the year, both in the short end, but also in the long end of the curve. If you think about the diversification properties that these assets might bear for multi-asset investors.
You feel comfortable you're getting rewarded at the long end when it comes to US treasuries?
I think we still are. The worry is more around the fiscal issues, which we know they're very prevalent in the US, and whoever is going to win this US election is likely to continue to have a very strong growth from a fiscal standpoint. And we're not seeing the same narrative in the market that we were seeing, for example, last year around worries for fiscal balances for the US. So that could come from a volatility standpoint to, wobble markets a little bit. But I think in an environment where you might have growth decelerating, should you go into this type of environment, these long-end bonds could provide some diversification.
On the equity story of the US, then, does the lack of breadth challenge the further upside for this? Does it concern you that this remains a very concentrated and narrow rally in the US, or does it suggest that you're going to get that breadth, more funds, more cash is going to be put to play?
It's challenging. It has been very challenging since the beginning of the year, seeing this strong dichotomy in markets, and in particular, the power behind a narrow number of stocks leading some of the strongest gain. And this has changed throughout the year as well. So it was more specific, more marked in the first quarter. Then we have a bit more breadth in markets in the second quarter. And then again, more of late, we've seen a divergence between both developed and emerging equity markets, and also within developed markets between the US and Europe. And so this is challenges for investors. However, I think, there is a longer-term trajectory that will lift the market altogether or will drive the market higher or lower depending on where the overall growth picture is. So in a way, those could be potentially more shorter-term opportunities in these divergences between different equity prices within indices. But if you look at the longer-term picture, I think you're likely to see either a more broad upside or a more broad downside in equities, so moving closer together.
OK, Maria, thank you very much indeed on looking for opportunities in a divergent market. Maria Municchi, fund manager at Mgmt Investment Management. Coming up, Novonesis shares are rallying in Copenhagen. It's one of the biggest gainers so far in the session this Tuesday. That's as the firm upgrades its outlook. We're going to discuss all of that with the company's president and CEO. That conversation is coming up. This is Bloomberg. Welcome back. Now, Novonesis is the top gainer on the European Stock 600 today, currently up a little over 5%. That's as the firm upgrades its outlook for the rest of the year, raising the view on margins to between 35 and 36%. Also seeing sales growth, organic sales growth at the upper end of the 5 to 7% range. Very pleased to say I'm joined now by Ester, Baiget, the Novonesis president and CEO. This, by the way, is a company that focuses on things like biosolutions, enzymes, microorganisms, and has recently merged with Hansen as well. And we'll get on to that part of the story. Esther, thanks very much for joining us in the studio. So clearly investors are welcoming the upgrade in terms of the outlook. What is underpinning that more positive and constructive view?
Well, we let investors to do their job. We do ours. And we do feel in a very good place. We are in an extraordinary place of comfort by combining two amazing companies that together they are even better, even stronger, even better equipped to develop and bring value-added solutions to our customers and while generating accretive and sustainable value growth for our shareholders. The update on the guidance, it is a clear point, one point more, showing that we are in a good place, a place of comfort. We're seeing a positive momentum on the integration of both companies. We're doing very well on the cost synergies. We're at 80% run rate of the 80 to 90 million cost synergies that we committed to. We are on good momentum also with the growth synergies. And together, collectively, we see extraordinary also good collaboration with our customers. So that leads a great on EBIT margin and moving on to the high end of our revenue, but also moving firmly on the long-term expectations.
Do those revenues, in terms of the synergies on revenues, does that give you further upside, do you think, in the quarters ahead? I mean, are we looking at further upgrades before the end of this year, before this year is out?
So we are committed to the guidance that we have just announced, but then especially we are recommitting today in Capital Markets Day, it's a special day today for us. We're recommitting our commitment of 6 to 8% growth till 2025, also with ambition to accelerate that growth after that. And that growth will be, that accelerated growth is exactly what you're underpinning, Tom. It is continuing the momentum of extraordinary company, but at the same time collecting the growth of the now even better portfolio, better equipped to grow with our customers. You touched on clients, which is interesting. Has the merger with Hansen allowed you to bring on more clients? Are you seeing that? We're becoming better for our customers. Now we have enzymes and microbes that together we can co-create the solutions that they better respond, the answers for our customers. We bring alternatives to regenerative agriculture. We bring alternatives for plant-based food, for clean label, for plastic recycling, for clean and sustainable fuels. That when you have a stronger biotech powerhouse, you're even better to provide those answers. And you're seeing more clients and customers as a result of that? We see us connecting better and bringing more solutions to the existing customers. We are present in more than 30 different markets. And now with a stronger sales force, we are a better partner for those customers. What does it mean for the innovation pipeline? It means that, for example, if you are in the dairy industry, now with the combined portfolio of Novonesis, our customers, they can have not only extraordinary cultures, but also the very best enzymes to make more yield, more cheese, more yogurt, more taste, more flavor, with also clean label. If you are in agricultural, you have the co-creation of plant, of microbes and enzymes bringing also higher yields. If you are in probiotics, now you have also a stronger portfolio that we can bring and cross-fertilize the solutions.
And you've been doing a lot in terms of precision fermentation, which is another way of making protein. What is the potential market cap of that part of the business, the market size of that part of the business?
Today we see an addressable market for Novonesis collectively as a company of 20 billion US dollars.
Okay.
Or 20 billion euros. That's the addressable market cap, addressable market that we see for our company. But that comes by smoothly and firmly replacing the solutions of the past, replacing fossil-based solutions, replacing ingredients, bringing clean label, bringing alternatives that provide lower sugar added. It is slowly and firmly growing our path. And we agree with the projections that they say that the bioeconomy is going to more than multiply by 7 within the next 2 decades. We know that's true, and we're going to make that happen.
How do you think weight loss drugs like Wegovy and Ozempic are going to change this market?
Well, what we see from the consumer, from our customers and then the consumers, is an increasing awareness of health, an increasing willingness to move into healthier products without compromising taste, performance, nor cost. And all that it is through biosolutions. Wegovy is probably one driver more of that acceleration. Very early to say the impact, but for sure moving into that trend.
But is it a threat or is it an opportunity?
For us,
the weight loss drug phenomenon.
No, for us, definitely it is an opportunity. The willingness for better, cleaner, and healthier. It also an opportunity, the need for higher protein. We see a strong momentum from our customers asking for more protein, not in dairy solutions, for example. And that's coming with enzymes. That's coming with also cultures that they make more protein on those yogurts that you will be able to use as a complement. And we also see an increasing pull for better probiotics that they complement the gastrointestinal health and the microbiome that at the end it makes us feel better.
What are you seeing in terms of volumes in the current quarter?
We are in a good path. We don't give guidance for the quarter, right?
Yeah.
We give guidance for the year, and we just upgraded the guidance.
You're being cautious, but it's looking positive in terms of volume, because you talked about pricing. So I just want to get a steer in terms of the volumes and how that evolves.
The growth this year is mainly through volume. Pricing is a component, but on the upgraded guidance that we're bringing on revenue to the upper end of the guidance, that we're coming to the upper end of the revenue guidance, we continue to see that volume is going to be the main driver of our growth.
OK, volume is going to be the main driver. Ester, Baiget, thank you very much indeed. The CEO and president of Novonesis, the stock up 5.1% so far in the session, the leading gainer, one of the leading gainers across the European space. Much more to come. Stay with us. This is Bloomberg.
Yes, the inflation number is getting softer and trending down towards that 2% goal that everyone wants to see, and that's really good news. But here's the thing that I'm thinking about. If you're Fed Chairman Powell, are you going to ease so quickly when equity markets are all-time highs, job markets are incredibly strong and robust, and the economy is strong? Because if you were to ease, might it just inflate a little bit more the economy, equity markets, and cause these animal spirits to come back and inflation to come back? And so they're going to go, I think, very, very slowly and very, very cautiously. So you might expect one ease or two eases and then a long pause to see, did it do anything to reinflate inflation?
Yeah, but all this ends up being academic to a certain extent, because we keep talking about what the Fed may or may not do. And the question I guess I really have is, does it matter, right, at least in the here and now, for the economy and the markets? I mean, 25 basis points, even 50 basis points of easing. Does that have a material impact?
The U.S. economy is so strong, and the reason why it doesn't have a material impact is because the Fed really doesn't matter. And that's really hard to say. No, they don't really matter, given the amount of fiscal stimulus that's happened. And the fiscal stimulus has been so exorbitant, so huge, never before seen in a growth market like we've had. And yet it came through in trillions and trillions and trillions. I'm talking about the Infrastructure Act, the CHIPS Act, and many other acts that added trillions of stimulus at the time the Fed was tightening. So I would say that you're right about that. It is a bit academic because here we are at higher rates and the economy is just fine. You have to stay bullish because the economy is strong, jobs are strong. Stock market, we're going to see what's going to happen with second half earnings, and we're going to have record earnings in the third and fourth quarter. So I'd say stay bullish for equities and stay bullish for credit as well, because a higher rate environment that we're seeing is really, really bullish for the bond market.
Marathon Asset Management Chair and CEO Bruce Richards speaking to Bloomberg. Now, the hunt for Boeing's new CEO is gaining momentum as the plane maker navigates one of the most turbulent stretches of its century-long history. CEO Dave Calhoun is set to testify aboard the Senate Permanent Subcommittee on Investigations today. US senators are expected to accuse Boeing of putting profit before safety following that near-catastrophic accident on airborne 737 MAX 9 aircraft at the start of the year. Coming up, EU leaders postpone a deal on how to divide the bloc's top jobs as concerns over defence ripple across Europe amid the political turmoil in France. We bring you the details on that next. This is Bloomberg. European stocks rise a modest 0.2% after a tech rally drives Wall Street to another record. The Fed's Patrick Harker backs the case for one rate cut later this year. Deal delayed. European leaders postpone an agreement on how to divide the bloc's top jobs. Talks will continue ahead of a summit next week as Ursula von der Leyen hopes to win a second term as Commission President. Plus, Marine Le Pen's party says it needs an absolute majority to govern France. That's as polls show the far-right National Rally in the lead less than 2 weeks before voting starts in the parliamentary elections. Good morning and welcome to The Pulse. I'm Tom Mackenzie in London. Let's get to that story then. EU leaders postponing a deal on how to divide the bloc's top jobs, opening the door to further bargaining before a summit next week. To discuss the details, let's bring in Bloomberg's Oliver Crook, joining me now from Berlin. Ollie, no agreement then. Where are we in terms of the horse trading around the top jobs in Europe?
Yeah, the famous horse trading that goes on in Brussels that really began last night officially at this dinner that was being held in Brussels by the EU member state, all the leaders and the Presidential Council trying to get in there and trying to thrash out these jobs. And actually going into it, Tom, it looked pretty good in terms of actually getting some consensus. But as ever with Europe, building a little bit of suspense into it, they weren't able to settle it. Nothing has changed really on the macro side. VDL, Ursula von der Leyen is still the preferred candidate for the Commission President. That is sort of the top job out there. There's also Kaja Kallas, the sort of Estonian Prime Minister, who would be leading foreign policy. Where the debate seems to be centering around is the European Council job, which is a sort of a mystical figure in Brussels that basically shepherds the European leaders in meetings like the one that went on last night to try to make decisions. That's currently held by Charles Michel. That is a 5-year term, generally speaking. We understand that the EPP, the center-right, and the socialists would actually are debating maybe that should be split in half. The EPP pushing for that because they did so well in the election and really wanting to hold sort of half of that tenure to gain a little bit more power in Brussels. That kicks it into next week when the European leaders have their informal meeting in Brussels. But that wraps, Tom, just 2 days before the French vote, which is obviously hanging over basically everything in Europe.
Yeah, talking of which, Ollie, Macron clearly a weakened leader, at least for now, and the polls suggest that that continues. How is the challenge of Macron? How is his political travails? How is it all being seen in the halls of power in Brussels?
Yeah, Tom, I think there are so many dimensions in which this is going to sort of echo through the halls of Brussels. But let's just take, defense, for example. He's been very outspoken, advocating at one point, opening the possibility for having sort of troops on the ground in Brussels, talking about joint debt on defense, all of that sort of stuff, with him very weakened at home and potentially not even having the prime ministry after, in a couple of weeks from now. He's sort of a leader without a mandate potentially in Brussels. So that'll really weaken his argument on those things. That obviously throws open the door and the question, Tom, of what what would Marine Le Pen's party actually do? And this is a sort of open question. I mean, particularly on defense, she's been historically quite laudatory of Vladimir Putin. She's sort of tempered that somewhat in the last sort of year and a half, being a little bit more hedged on the rhetoric towards Ukraine. But they had a sort of pamphlet on sort of their proposal on what to do with European defense on their website. And they took this down last week. And part of that, Tom, was to basically extract France from the NATO command structure. So a lot of questions for the politicians in Brussels about what that would look like if they were to sort of win the prime ministership in France.
Ollie, France can't get a break, right? Mbappe, I'm just reading, and I physically winced when I saw the photo, I have to say. If you're shy to that kind of thing, maybe don't zoom in too closely. But poor old Mbappe, so he's going to have to wear a mask. They've confirmed he broke his nose.
Yeah, Tom. So listen, it's not the only French leader with a bloodied nose and maybe a sort of reduced playing schedule going forward. It's not just Macron, but Mbappe. It's sort of a real crusher for the French. They did win last night, that's not nothing. But breaking your nose at the sort of 87th minute of the game is not ideal. But sort of take it to the politics. I mean, he was actually outspoken about the sort of rising of the far right. You can see it there on the screen, saying that he is against extremism, against ideas that divide within France. So this is really, ubiquitous in France. Even the football can't get away from it, Tom. And I should say also the case in Germany, as you can see here. This is what we're getting in the bureau today. Little soccer balls.
I know you still have the what is that? Are you getting soccer balls on pens? Is that what that is?
Yeah.
That's
pretty exciting stuff
from the organisers.
It's a lollipop. I don't know what you guys call it over in Britain.
Oh, it's a lollipop. Don't eat that on air, Ollie. It's not good for you. Oliver Crook, thank you very much indeed with the latest on European politics and, just as importantly, frankly, the football as well. Ollie, thank you. Now, more serious matters at hand. Russian President Vladimir Putin is going to be visiting North Korea. In fact, he's en route there. We might get pictures in the next few hours. He's also going to be visiting Vietnam as well, which is interesting given that the US has been cozying up to that country. In terms of Pyongyang, though, and what North Korea might offer, of course, the country has been a supporter and a firm supporter of Putin's war of aggression on Ukraine. And let's expect both countries to deepen their military cooperation during this visit. So we're watching that, and we may get those live pictures. Those pictures you're seeing on the screen right now dating back to the Russian president welcoming Kim Jong-un in Russia last year. Now, Donald Trump's former national security advisor says Trump should sever all ties with China and resume nuclear weapons tests if he is re-elected as president. Robert O'Brien also writes in Foreign Policy magazine that Trump should consider deploying the entire US Marine Corps to Asia. Here in the UK, Brexit figurehead Nigel Farage has unveiled a, quote, unashamedly radical manifesto for his Reform UK party ahead of next month's general election.
This election is, for our party and for me, the first important step on the road to 2029. Our aim and our ambition is to establish a bridgehead in Parliament and to become a real opposition to a Labour government.
OK, Bloomberg's EMEA News Director Ros Matheson is here with the implications of what we've been hearing from the Reform UK party, their manifesto or their contract with the people. Walk us through the key points. Does it really matter? Farage himself has said, look, we're not going to be governing. This is a long-term play. What are the standout policies for you in this document?
Yeah, as you heard him just saying, he's talking about a bridgehead in Parliament and 2029 and being, really displacing the Tories as the main opposition party in the UK on the presumption that Labor does get in office in a few weeks. So what he's talking about are policies they're going to push the Tories, but also push Labor potentially and sort of seize what they see as the public narrative around issues like migration at the moment. So what we're talking about is in the manifesto are policies to sound tough on migration, to compel people to take jobs. You can't sit around and take benefits. You have to take a job somewhere in the UK. There's also, they're going to raise the threshold for income tax in the UK. They're going to deal, they say, with the National Health, the waiting list for National Health Service. They're also going to get rid of inheritance tax, and they're going to boost investment, really drilling for oil and gas in the North Sea, and walk away from all the net zero pledges that have been made. So that's really speaking to what they say is some of the noise you get in the electorate at the moment. And so, again, that's not necessarily, just pushing the Tories, but also pushing Labor and potentially a future Labor government. They're going to say we're going to be really honing in on that to become the total voice of opposition in the UK, and that includes around issues around migration as well.
And to be that voice of opposition, what is the polling suggesting in terms of the number of MPs they may have, in terms of the total vote they may have, how that could play out parliamentary in terms of the arithmetic?
Well, right now they've got none, but they're hoping for some, and the polling suggests they might get there, particularly Nigel Farage, the most sort of famous figure really in the Reform Party, and the most notable, might get a seat himself in Parliament. They might get a few, but again, polling at 14% when you first pass the post in the UK, that's going to be a tough job to get a lot of seats in Parliament, but doesn't mean that they stop the Tories getting more seats in Parliament. Really, that's about sort of destroying the Tories and then presenting themselves as the major voice of opposition in the UK. So even if they don't get a lot of seats in Parliament, they just get that tiny bridgehead, perhaps, that Farage is talking about. What they're saying is we're here to stay and we're going to continue to push Labour on our agenda.
Yeah, and when you see what's happening in France with the National Rally, you should not, it would be warned, not dismiss, arguably, some of this coming from the right wing here in the UK as well. This time, of course, talking about the Reform UK Party and Nigel Farage and his plans. Bloomberg's EMEA News Director, Ros Mattison, with the context there and the potential implications for both the Conservatives and the Labour Party. Coming up, France's far right urges votes, talking of which, to give it an absolute majority in the country's snap elections. We discuss the possible scenarios next and what it could mean in terms of the policy agenda of France going forward. This is Bloomberg. Welcome back. Now, France's far-right National Rally is asking voters to give it an absolute majority in the snap parliamentary election at the end of June. The party is leading opinion polls, but is not projected to win more than half of the 577 seats in the National Assembly. Strategists from the Bank of America said the political uncertainty has made French stocks the least popular in Europe. And in fact, the gains that we saw at the start of the session today have faded when it comes to French equities. We'll keep across that story for you, of course. At this point, though, let's bring in Famke Krumbmuller, Director of Geostrategic Business at Ernst & Young in Paris. Famke, thanks for joining us. So we hear the perspective, or at least the hope for, within his own party, future Prime Minister of France, that's where he would hope to be, talking to a French newspaper saying that the National Rally needs a majority in Parliament to enact their policies. What would that mean in terms of the future policy of this French government post this election if the National Rally Party had a majority in Parliament? You've been outlining some of the various scenarios in terms of the arithmetic, the political arithmetic, and what the political consequences could be.
Yes, so in my view, there are three plausible scenarios right now, and it's important to understand that out of the three, two scenarios actually have Bardella as Prime Minister of France, and contrary maybe to common perception, of course, we have a semi-presidential system in France, but it does mean that the government has a lot of power. And so the Rassemblement National in charge of the government in France would mean that they have power, obviously, over the budget, which is important, set ministers over civil service, and to pass the laws for which they get a majority in the Assemblée Nationale, France's parliament. Of course, the president will stay in power and he will represent France abroad and has some authority over foreign policy and defense, but not exclusive, which means that there will need to be some type of working together with the Rassemblement National to determine what that looks like and if that's possible. But I think the bottom line that is very important to understand is that if they hold the government, they have a lot of power in the French political system.
Yeah, and I want to put a pin in that point that you made, because I think that's misunderstood. That really stood out to me in terms of your notes to us, Famke, in terms of the fact that if there was this cohabitation, that the parliamentary powers would also have that check to some extent in terms of the foreign policy of the French president, of Macron. How would that work? Because there is that assumption, or there has been that assumption voiced by some, that those powers would still be ring-fenced for Macron. But you're suggesting that's not the case.
Well, the Constitution is not entirely clear. this is based on the fact that in the previous cohabitations that we've seen in the French system, there was that type of tacit agreement between Prime Minister and President that this was the way their responsibilities were divided. Also because the President has the power to represent France abroad, etc. Now, I just think that in a context where the Constitution doesn't necessarily set this very clearly, this is open for interpretation, of course, by the people in power, and this is where it will be interesting to see how exactly this is interpreted in a cohabitation between President Macron and a Prime Minister Bardella.
And as you say, you run through the three likely scenarios, the three possible scenarios: a hung parliament, a soft national rally in terms of the victory and the number of seats they have, or an absolute majority for the national rally. In all three scenarios, you say there will be significant power for this group, for this political party within parliament in France. What could be a potential check then on their ambitions?
Well, the check on the ambitions is determined by how many members of parliament they manage to get elected in these legislative elections. So if they have absolute majority, that of course means that they have enough deputies to pass laws. This is when they have the most power. Then there is an intermediate situation where they have, where they are the biggest party but don't hold an absolute majority, which is the same situation to Macron's party before he dissolved the assembly, where they will need to forge coalitions in order to pass laws. I think that will be very difficult, but currently difficult also to predict, given all the reorganization that's going on in the French political system right now. And then they will hold the least power if we end up in a hung parliament where it's not clear who manages to get a majority.
Tomorrow, Wednesday, the European Commission is expected to name and shame, put on the naughty step, some countries that have overshot in terms of their budgets or flouted those budget rules. If France is included, and there's speculation that it will be, if it is included, would that benefit Le Pen or would it benefit Macron?
To be honest, I don't think it will benefit anybody in this stage in the French system. Of course, Le Pen and the Rassemblement National will have a relatively easy time arguing that this is the result of previous governments. It is the result of Macron. Macron will argue he had no choice. It's the result of the COVID crisis, and he was trying to preserve purchasing power of the French, etc. But the Rassemblement National, from what we've seen in the past in terms of their program, and there is uncertainty now with regards to what their program will be because they haven't published their economic program for these elections, it relies a lot on spending or on reducing, for example, the VAT and things like that. So they would also, currently they're on a path where the expectation would be that they also continue to spend. And so it wouldn't benefit them either. Whoever will be in power will be constrained, in my view, by how the financial markets react to their program.
Are we in the foothills of a potential existential crisis for the European Union?
Well, let's say that definitely the fact that Macron is extremely weakened, whatever exactly happens, so I think this is one of the few certainties that we have at this stage, that is pretty bad news for the EU in a context where it needs to deal with important and urgent international crises. Of course, we have the war in Ukraine, but we have big other challenges with regards to other international relations. The EU needs to think about its competitiveness, about the energy transition, about many things that require bold action at the European level. And for that, we have historically always needed a Franco-German alliance that works well. And I think it's pretty clear that at this stage, between a weakened Macron and a weakened German Chancellor Olaf Scholz, we can't rely on that anymore at the European level.
OK, Famke Krumbmuller from Ernst & Young with the analysis on the politics of France and the EU. Thank you very much indeed. Coming up, EU states push past opposition to adopt a controversial nature restoration law to restore nature across the bloc. We bring you the story on that next. This is Bloomberg. Welcome back. The European Union and member states have finally signed off on a controversial law to restore nature across the bloc. The deal would return at least 20% of the area's land and sea back to its original state by 2032. Joining me now for more on this is Bloomberg's Lyubov Pronina, who joins us out of Brussels. Lyubov, why has then this nature restoration law become so controversial? Why is it significant?
Indeed, controversial is the word. Out of 50 laws that have been adopted since 2019, when the so-called Green Deal was announced, none have been as controversial. And as you rightly pointed out, this is the law to rewild or to restore at least 20% of the continent's land and sea to its original stand by the end of this decade. And it has really seen a very rocky path over the past 2 years. There was a major political agreement reached last year, but already for a much watered down version. And then member states came in that pretty much blocked the deal, among them Hungary, Poland, Italy, also Nordic states that were really worried about the impact on their forestry industry. And basically the deal seemed pretty much dead, but then on Monday, yesterday, member states managed to approve the deal, so it was resolved.
How did they get to that breakthrough then? As you say, this was a long-running source of contention. How did they manage to make progress and get this done?
So it took literally one vote, one decisive vote to move it through. And what is interesting, it came from Austria's climate minister, who actually acted against the decision and the opinion of Austrian Chancellor, who said that he didn't give an agreement, a consent to this deal, and that he will actually challenge this decision. But as the climate minister said, it was really worth the fight.
What does it mean? What are the implications for the rest of the EU's Green Deal? Because this is far bigger than a question of Austrian politics. This has ramifications for the Eurozone.
Absolutely. As I said earlier, it was one of the 50 deals that were passed in the current legislative period to help the Green Deal evolve the continent to climate neutrality by 2050. And there were heated debates on banning the combustion engine vehicles and also renewable industry. We know that, for example, the plan to have the pesticide use was also a failure, but this managed to sail through, and the Green Deal will go ahead. We recently had elections in the European Parliament, and although Greens lost a few seats, the far-right parties didn't gain as much as was predicted, and we still have a very confident, very strong centrist majority, which actually supported the Green Deal 5 years ago.
Bloomberg's Lyubov Pronina in Brussels. Thank you very much indeed on the broader implications of this move out of Austria. European stocks posting gains so far in the session of just shy of 0.4%. The CAC 40 over in France is back in positive territory, posting gains of 0.2%. US futures are flat. Bloomberg Brief is ahead. This is Bloomberg.